Bismillahirrahmanirrahim. Welcome back once again. As I told you in the previous video, we were discussing about cash flow statements and we discussed these things. Let me show you. We discussed about this cash flow snapshot and then we discussed about these three activities: operating, investing, and financing activities. Now we will discuss these three activities individually in this video. We will individually discuss about operating activities, about financing activities, and about financing activities. Okay. If you are new to my channel, you are requested to subscribe my channel. If you have not subscribed it before, this channel will be helpful for you, especially if you are student of business studies. Okay, ji. First one, these are the three portions, three categories which are used in cash flow. First one is operating activity. Operating cash flow refers to the cash flow that results from firm day-to-day activities of producing and selling. For example, a firm is selling ballpoints. So on the daily basis, ballpoints are manufactured in the firm and ballpoints are sold in the market. So the cash generated from the sale and purchase of the ballpoints is included in the operating cash flow. Certain aspects are not included in this. For example, expenses associated with the firm's financing of its assets or purchase of building are not included. These things will not be included in the operating activities. For example, the expenses the firm is making for its assets or for purchasing building. The purchase of building will be included in investing activities because this is a big decision. Then depreciation is also not included. Depreciation, what is depreciation? Depreciation, for your knowledge, let me tell you, depreciation is basically the reduction in the value of an asset. For example, I buy a motor car. When I bought a car, after some times, the value of car will reduce and it will keep on reducing. So reduction in the value of an asset is called depreciation. And there are other methods to calculate depreciation. Inshallah, in our videos, we will also discuss. Then interest is also not included in the cash flow from the operating activities. The only financial exception that can be entered into the section is when we are considering the account of financial institution such as a bank where interest payment and receipts relate directly to operation. When we are dealing with the bank and this is our uh, like daily operation, we have to pay the interest, then this will be included, otherwise not. Also taxes are included because they are paid in cash. When taxes are being paid in the cash, then those taxes will be included. Operating cash flow is an important number because it tells us on a basic level whether a firm's cash inflows from its business operations are sufficient to cover its everyday cash outflows. The most important thing is because cash flow from the operating activities basically tells us, it gives us an information whether the cash inflows are sufficient, like we have to meet our expenses. If the cash inflows are sufficient to meet our obligations of cash outflows, so this is for the comparison purpose. The comparison between the outflow and the inflow is actually maintained, and then we can uh, make a make decisions. Hence, a negative operating cash flow is a bad sign. Negative sign is not good sign. Let me highlight it for you. Cash flows should not be negative. Okay. In the operating activities, especially in the operating activities, the cash inflows should be there and they should be positive. Then cash flow from investing activities, the second head. Cash flow from investing activities is a cash generated or expended from a firm's long-term investment. When a firm is making long-term investment, opening a new, purchasing a new building or purchasing a new warehouses. So these are big investments. So such investment, they are considered in cash flow from the investing activities. It is the money spent on non-current assets, less money received from the sale of non-current assets. Example of entries that go into this section include PPE, property, plant and equipment, or interest received. We know What are the non-current assets? Non-current assets are those assets which cannot be converted into cash in less than 1 year. So non-current assets are basically your big assets. So when you are purchasing new plant, new machinery, or you are purchasing non-current assets, or you are spending money on non-current asset, it means this should be included in investing activities. When you are purchasing, it will be an outflow of cash, because when you are purchasing a plant, you are paying to purchase that. So there will be an outflow of cash. And when you are, let's suppose you are selling a business, so, you are selling a plant, or you are selling your machinery, or you are selling your property, this will be cash inflow. You are selling the property, and in return you are actually getting the cash. Okay, so keep in mind, when you sell your property, this is cash inflow. When you buy a property, this is cash outflow. And you mention those cash inflows and outflows in the cash flow statement. And you can recall the cash flow statement as I showed you this one. This is a cash flow statement. You can go to the video, you can pause, and you can read here how these activities are, how these transactions are included in operating, investing, and financing activities. Let's move to the next step. Cash flow from investing activities can be positive if the firm sold off more assets than it purchased. This is a simple rule. If a firm has sold more assets, the sale is higher than the purchasing, then cash flow will be positive, and it will be an inflow of cash. And if firm is purchasing more assets, then it will be an outflow of cash, and it will be maybe in negative. Then cash flow from financing activities. Cash flow from financing activities is a cash generated or expended as a result of its debt and equity choices. Debt and equity choices mean when firm is purchasing, when firm is actually gaining or borrowing money, or when firm is wants money and it borrows from a bank or any other financial institutes. So this is included in the financing activities. The last major component of a firm's cash flow comes from any action it has taken during the year to raise cash from the investors. Like, this is a major component of firm getting money from its investors. So firm is raising money from its investors. So our firm is borrowing money from its investors. So such money will be included in the financing activities section. The company may also have paid back outstanding borrowings or repurchase its own shares. Company maybe need to pay back the previous borrowing, maybe from the bank. So company has to pay back the money to the bank. So this will be cash outflow, and it will be written in the financing activities section. And same, repurchase its own share. Firm is purchasing its new share. Firm is paying money and purchasing its share. So there will be a cash outflow. Cash flow from financing activities can be substantial. So it can be sufficient, it can be substantial for a firm, and cash flow from the financing activities. So these are the three activities. And net cash flow, given the figures we have come up with, like we have discussed that figure before. Let me show you again. This one, it's talking about this figure. We are ready to calculate cash flows from the firm. The total cash flow is founded by adding the cash flow from operating activities to the cash flows from investing and financing activities. From when we add all the cashes from operating, investing, and financing activities, and reduce all the payments or all the cash which is going away. So when we deduct that cash, we come to know about the net cash flow. So let me stop my video here. In the next video, inshallah, we will talk about ratio analysis. I will upload this video on my playlist of business finance. You can go to that playlist, and from that playlist, you can watch various other videos or the initial videos of this book. And I suggest you to watch those videos also, because those videos will be very helpful for you to understand these new videos. So once again, in the end, I would like to request, if you have not yet subscribed my channel, you are requested to go to the subscribe button and hit subscribe. This channel will be helpful for you, and I will also publish here videos related to the important questions that can be very helpful for you during your exams. So you are requested to subscribe my channel. And in case if you find any ambiguity or if you find any concept difficult, you can write to me in the comments. I always read my comment section, and in the comment section you can read you can share your queries and your questions. Thank you so much for watching my video. Stay blessed.